Welcome to You Can Sit with Lux, our new podcast where real estate meets real life. Here we will take you behind the curtains at LUXE Properties to showcase our culture, our team, and how we elevate the real estate experience and everything in between. Hello and welcome to You Could Sit with Lux. I am your host, Wesley, Ulloa, and I am excited to be here today with our guest who I have personally known for over 30 years now. I have seen her start in the real estate industry and now grow into a new position in the lending side of the industry. So I'm very excited to share with you our guest for today, Anais Merino Delgado.
That's a blast from the past.
I know. Gotta mix the maiden name in there.
Thanks, Les. I'm so happy to be here.
Thank you. So before we get into lending, I want people to understand your background. You're not new to real estate. Now you're in the lending side of the business. But tell us how it all got started.
So I still remember us going to dinner one night. I don't know if you remember. Of course, we were going out after dinner and we're sitting in the car and you're like, hey, I was a stay-at-home mom at the time. And you're like, hey, why don't you come work with me? And I'm like, doing real estate? And you're like, yeah. And you're like, you can just bring Mila and you can show properties and we can work together. And I'm like, okay, that sounds fun and it sounds good. That same week, I booked the class and I took the test. And the next thing you know, I was with you working. I never looked back. I never looked back. So thank you. I don't know if I've ever had the chance to say thank you. So thank you.
Yeah, no, I don't even remember the place where we ended up going after, but I remember I was like, yeah, this is a great idea and you should do it. And I don't know, I think all these things. I'm like, everybody, let's all work together and let's have fun. And some days
we're a big, happy family.
Some days are good. Some days are
very stressful.
Yes, but I think you love it.
I do love it. I wouldn't change a thing. I love coming to work every day. I love working at Lux. I love working with our agents and I love working with you. So yeah, I wouldn't change a thing.
Oh, well, I love working with you too. And I'm so happy to see you grow. You were actually prior to real estate, you had a whole career. You were doing something completely different. And then obviously children changed that. But can you shed a little light on that?
Yeah. So, I've always been in sales. I started working at Lady of America selling memberships. Something we have in common.
Yes.
And then I worked at Valpak. I worked at Comcast selling advertising. And then my last stop was CBS.
Yes, I remember that.
With TV commercials.
You were in the media worlds.
Yeah.
And now it's funny. Real estate is kind of like media. Look at us.
Kind of, sort of.
Interesting.
Yeah.
So what made you jump into lending? Explain that transition.
So when I started considering changing over, I was part of a partnership. And I thought it would be such a great idea to just guide the buyers from start to finish, not only looking for homes, but doing the loans too. So it took me a little while to really say, okay, I'm going to do this. And I want to say it was the beginning of COVID that I said, I'm going to go and get my license.
Yeah. And how would you say it's different from real estate being on the lending side?
So I think the lender's always the bad person. Everything is always the lender's fault. So I feel like there's a lot more pressure as a realtor. Yes, you have to find the perfect home for your buyer, but the main thing is keeping track of the timeline. Okay. Timeline and contract. I think that's the biggest thing when you do real estate. With the lending side, there's obviously so many factors, so many obstacles. So yeah, it's different.
I wouldn't say the lender is the bad guy, but I feel like the lender is the one that controls whether you're going to get the loan or not. And it has a lot more caveats because the rest
responsibility.
Yes.
Honestly. Yeah.
Yes. Right. So, and it makes sense. A bank is lending you hundreds of thousands of dollars. And I think people forget, where are you going to get that money to buy that house? Right. Who is going to lend you $200, $300, $400, $1 million?
Yeah.
And it's a big chunk of change. So I think people forget that. And then they just say, lender, give me the money.
Yeah, no, there's a lot more to it. Yeah. They really want to make sure that you're able to pay that money back.
Of course.
Right?
And I think anybody would, if they're lending their money, would want to as well.
Absolutely.
So let's get a little bit into LUXE Lending. For people hearing about LUXE Lending for the first time, what is LUXE Lending and what is your role?
So I think LUXE Lending was created or I mean, I don't know if you agree with me, but to offer a different experience, not only to the buyer, but for the realtor.
Of course.
When I was a realtor, I was oftentimes very frustrated with the lack of communication from the lender or the lack of follow-up from the lender. So I think that, when you created us.
Yes. I didn't create you.
Well, not me, but you created LUXE Lending. And I think it was, mostly to change that experience, make the experience a better one, a smoother process, one that the buyer knows what to expect, and always a clean line of communication between us, the realtor, and the buyer.
100%. I mean, I think you hit the nail on the head. That's the goal. And for those of you who don't know what LUXE Lending is, that is our lending division in LUXE Properties. And Anais is one of our best lenders in LUXE Lending.
Thank you.
And so, yes, to echo that, the goal was always, hey, when we created LUXE to start, it was always to say, hey, how can we improve the real estate experience and what can we do? Because this is the most important purchase of somebody's life.
Absolutely. Absolutely.
Lending is an integral part of it, because if we don't have a robust lending system, people are going to be left without deposits, places to live, and we have to make sure that we're supporting them. So yes, you're 100% right on that. How do you personally support the clients and agents to give them that smooth process?
I mean, again, a clear line of communication, always available.
Yeah.
This is not a 9-to-5 job.
Yeah.
This is an all day, everyday job, weekends. So I always like to make myself available for any questions that they might have. And coming from the real estate side, a lot of times we have new agents that are learning and growing. And I find myself a lot of times, teaching them and guiding them and making sure that they don't make mistakes that can, later cost our clients, money. So yeah, I consider myself an asset in that sense.
100%. No, and I think we have to also mention, because I don't think we fully mentioned at the beginning, you were a top producing agent and you decided to switch over to lending, right?
Yeah.
So you completely switched gears and now you're a top producing lender, but you could provide so much value to those agents to make sure, even sometimes the experienced agents make some of those mistakes that, of course, cost a lot of money. So you not only communicate, but then you come and you support and guide, which, yeah, you really mentor these people wherever they are from a different perspective, which is great. Not a lot of people can provide the real estate perspective and the lending perspective in one. So
yeah, I love that. I love how you worded that.
And I think you don't practice anymore, right? So you're pretty much 100% lending.
100% lending, yeah.
So what are some advantages of having the lending division in the LUXE brokerage ecosystem?
So as cliche as this sounds, one of my favorite sayings is teamwork makes the dream work.
Yeah.
And that's exactly how it works. It's when I decided to get my license, I was like, how great is it that I'm going to be able to work with these agents that I've created these friendships and these relationships with to help them, succeed. So it's great to have that, in-house, that support, that guidance, and just, that you can just pick up a phone at any time and somebody's there to have your back 100%.
Yeah. And I know you're working closely with a team that you help with open houses as well. You help in that support.
Yeah.
Not only being always available, but you also come and add that extra support if they need that as well, right?
Yeah, of course. And, not only that, speaks about me, but as far as LUXE Lending, we offer so many programs, so many, different things that we can help your clients. So it's, an added bonus.
All right. So now let's switch gears a little bit and let's talk about the current lending landscape. Can you explain to our listeners a little bit about what the current lending landscape looks like?
Yeah. So what I'm seeing a lot of is buyers that are very rate sensitive and very monthly payment sensitive.
Yeah.
So, things have gotten very expensive, not only the housing market, but everything else around us. So, I think we really have to teach these buyers. It's not so much about the purchase price, but about what they're comfortable paying every month.
Yeah. And it's funny you say that because I recently bought a property about 6 months ago. And I was one of those people that I didn't want to buy. I was like kind of nervous with the way prices were. But then once I went and sat down and got the payment, I was like, oh, this makes sense. I could rent it out for more money and I'm only paying this much. And when you start seeing that, that's when you start, yes, it has prices gone up. Sure. But you start thinking that this, what really matters is what can I make out of this? Now, with that being said, we are in that difficult environment. What tools are you using to make deals work? Buy downs, credits. Talk a little bit about what we're doing.
Yeah, so we're seeing a lot of, seller credits to help buy down the rate.
Yeah.
I don't know, $5,000, $6,000, $7,000 can make a big difference on a monthly payment. What else?
Where are rates right now?
Right now, we're averaging probably in the low sixes.
Okay.
Right now, the average is a 6.2.
Okay.
So again, if you have perfect credit, you're coming in with a higher down payment, you can probably get a little bit, better rate closer to 6.
And then if you add the buy down, can we get in the 5s?
Yeah, absolutely you can.
Okay. Awesome.
Definitely. Even, we're even seeing non-conforming programs, investment programs, bank statements that you can very well get under 6.
Yeah. And I did the bank statement loan and I was a big fan of that because that was so much easier to use than your traditional. Yeah. So it's like literally, I don't even think now that I circle back, it wasn't the bank statement. It was the DSCR. Yes.
It was an investment program. Yeah. So easy.
Can you talk a little bit about that program, how it works?
Absolutely. It's for investment properties.
Okay.
And basically they use the property as the income.
Yeah.
Okay. So they don't ask for employment. They don't ask for income as long as the possible rent of that property covers the mortgage payment.
Yeah.
That's it. That's all you need to qualify.
Yeah.
And then you come in with a 20% down payment.
Yeah.
So it's perfect.
That was the easiest transaction I've ever done. And I just want to say, I want to commend you for the work that you guys do as lenders all the time, because every time that I've bought a property with a loan for the last 20 years and I have to do my tax returns and I have to do the entire thing, I cry. No, I literally cry every time I go through that process because it's just adding on so many layers. When I did the DSCR loan, I was like, this is the best loan I've ever gotten in my life.
So tell me the truth. Are you ready for the next one?
I don't know about yet. I need to go do my taxes and I need to go buy another house, but we'll see how it all works out. Now, another question. Speaking of, that rents and looking at the DSCR program, how much does the local knowledge matter in lending when you're looking at appraisals and the rents or just what's happening in the market here with property condition?
Yeah, so Miami is definitely not a generic market.
Okay.
Miami it's complex. You can't expect a lender in New York to, do a loan here and know about condos.
Yes.
Right? Because it's a little bit more complicated. So, it's a plus when you are a local lender and you know the market and you know what you're dealing with condos and insurance as well. So, it's key. It's key to a successful transaction.
I couldn't agree more. Especially, funny thing, not a lot of people know, Florida is the only state that requires 25% down for limited review condos. Every other one, it's 10%. So then these people come in here and they don't even understand the regular guidelines here compared to everywhere else. Now, what are some of the biggest red flags agents should look for when they're working with, let's say, a property or a borrower that things might get a little tricky? What should they be careful for on the lending aspect that are major red flags?
I mean, some of the ones that I can, at the top of my head are like, cash deposits.
Okay.
It's not a red flag. We can work around it, but that's something to be aware of. If you have a self-employed borrower that maybe has declining income, that can get a little tricky. Condo unknowns is a big one.
Yes.
Right? Does the building have reserves? Do they have, adequate insurance coverage? All that could make or break a deal. So it's important to go in there and find and gather as much information as possible.
And going into cash deposits, because now I'm just curious from my own knowledge, with those things, I know with condos, you could still make deals happen. If you have really big cash deposits, or let's say those declining incomes, can deals still be done?
Yeah, absolutely. Like you said, it's a red flag, but not impossible.
Got it.
Right? It's up to the lender to, find a way around it and guide your buyer to make sure that the deal closes.
Awesome. So finding those solutions.
Yes.
All right. Now that you got to figure it out. Like if we're the solvers over here. Now, positioning offers to win from a financing sense. What are some things that agents could be doing to make listing agents feel comfortable that this is a solid deal and it's going to go through?
So I always recommend the realtor to submit their offer with a pre-approval, not just a generic pre-approval, a personalized pre-approval with the address, the correct purchase price or offer price.
Yeah.
Because once the listing agent gets that, they know that the numbers have been ran for that specific property.
That's
okay.
Right.
Yeah. Another thing that I like to always push is, hey, when you do submit these offers, include me in the email.
Yes.
Hey, I'm gonna, copy the lender on here, and then I'll jump in. Funds have been verified, credit has been pulled. That offers such a sense of confidence in the listing agent. So I think that's important.
Yeah, those are really big tips. So you're willing to jump in and kind of help with these listing agents and let them know, hey, this is a solid buyer. We're ready to go.
Absolutely. I've actually had a few listing agents reach out. Hey, one of the reasons why we went with your offer was because you were so responsive and you jumped on that email and you made me feel confident and strong about the offer.
That's awesome. So good for our followers and our listeners to know that that's something that you could do to help them get their deals done. So we spoke a lot about the agent relationship with their lender. I want to switch gears and talk a little bit about the buyer relationship with the lender and maybe some do's or don'ts that will help them on their journey. So from experience, what's the biggest financial mistake that buyers make before they start their search or start looking for their home that sabotages their ability to buy in this market?
So I think the biggest mistake is making any type of financial change right before you're going to start purchasing a property. That being, a change of jobs, any big purchase that you're thinking of doing, any credit changes. Sometimes you pay off a credit card and then you close the account. That's not a good idea. So those are all things, to keep in mind, not to do.
I haven't even thought about that because that could affect your length of credit history. And there's so many factors that go into your credit. What do you see right now for buyers as like the minimum credit score that they need to get a decent rate? Decent rate would be the key question, right? Because I think what's the minimum out of curiosity?
So for conventional is 620.
Okay. And to get a decent rate?
I would probably say over 640.
640. Okay.
Yeah. And a lot of it is going to depend on your down payment as well.
Yeah. No, there's so many factors. And would you mind just educating everybody a little bit about how rates are calculated? Because I think people don't really understand all those factors that calculate a final rate. Like what are the biggest ones that make an impact on people's rates?
Heather, you mentioned that. Sometimes I have the agents call me and they're like, oh, but on the morning call, you guys said that the average rate is a 6.2, but now my borrower is getting a 6.7 because they're buying a condo.
Yeah.
So all of that comes into play. How much down payment a buyer is coming in with, what type of credit score they have, what type of property they're buying. All that affects the rates.
Yeah. So rate is affected by credit score, down payment, the type of property, any other big ones that you can think of? W-2 self-employed, does that make a difference?
Okay, DTI.
That's
an income ratio.
Okay. All right. So once you put all that in, then it generates what the rate
is going to be.
So every case is unique and every person is different.
Like everything in real estate, case by case.
Case by case. Now, how quickly or how far out should a potential buyer be starting or speaking with a lender for them to start planning this purchase?
I think anywhere between 3 to 6 months is a good benchmark. Now we're able to do a soft pull.
Yeah.
Right. We don't even have to run a hard pull and run your credit.
What is a soft pull for everybody?
So a soft pull is we run the credit, but it doesn't affect the credit. That's why they call it a soft pull. So the good thing about that is that, you're able to see where you are, what you need to improve, to make sure that you're ready, 6 months out or 3 months out when you're ready to purchase a home. And you have a plan.
That's awesome. I feel like a lot of people, I always say they're scared to talk to a lender because they don't want their credit to be pulled and now it won't get affected. So it's like they equate it to buying your car. You don't pull your credit until you find the car you want.
Right.
But here it's so much more important to plan because of all those things that you're talking about, because it can mean a difference of hundreds of thousands of dollars in interest payments.
Yeah, of course. And it could mean the difference of you getting pre-qualified or not.
Yeah.
And being able to purchase that property or not. So it's huge. Again, education is key.
Okay. Now, if somebody is planning to buy, whether it's 3 months, 6 months, or 12 months, what are the first 3 steps they should take today to get themselves in the best position?
So the first thing is to call LUXE Lending. Right? You fill out your application, do the soft pull that we just spoke about, pay down some of your debt.
Okay.
See how much money you're going to be needing depending on, the purchase price that you're looking to purchase, making sure that you have, the right funds to close on that property. So those are all things that, you need to prepare and have ready.
Don't change your job and don't get a new car.
Don't get a new car. Don't change jobs. Don't go from W-2 to self-employment. Please don't do that. But yeah, I think the most important thing is sitting down with a lender and they can guide you.
Awesome. And if people are interested in reaching out to you, where can they reach you?
They can call me.
Okay.
They can call me, text me, email me, come by Kendall. I'm always there.
And we will pass on your information for everybody here. But before we go, we always like to close every episode with a little rapid fire so people could get to know you just a little bit more.
Okay.
So here's how it goes. I'm going to ask you a few questions. You pick what resonates most with you. So we are going to start with heels or sneakers?
Definitely heels.
Definitely heels. I see you're wearing them now. Condo or single family home?
Single family.
Okay. Now for our followers, this might be a little bit helpful for them. Rate buy down or price reduction on the home?
Rate buy down.
For sure?
For sure.
It saves them a lot more?
Yep.
All right.
Absolutely.
Good to know. What do you prefer? Phone call, text, or email?
Phone call.
Phone call. All right. I guess I got to start calling you more.
Please do.
I'm an email girl. Spontaneous plans are planned to the T?
Ooh, that's a tough one. I guess it depends. The property's spontaneous. Spontaneous is fun.
I think that speaks to you. Then champagne toast or vodka soda?
Is that even a question? Champagne. Always champagne.
Champagne all day. Which goes with your spontaneous plan?
Yes.
All right, last one. Cuban cafecito or American coffee?
Cafecito. Actually, I just started drinking cafecito about 6 months ago.
Who was
I'm never a coffee drinker. Handle.
I figured. All right, now I know what to do. So I will bring you cafecito in the morning. And then when we're closing up shop, it's going to be champagne.
I like it. Sounds good.
Thank you so much, Anais, for sharing your story.
Thank you for having me.
Of course, anytime. And we appreciate you all. Hope you follow along our journey with You Could Sit with Lux. Signing off.